Steady gains on the Dow Street with the Nifty trading around 22,900, but the midcaps are surging on momentum. Midcap index has up over 2% with over 5 stocks advancing to every 1 stock declining.
The DGTR recommends imposition of 12.5% safeguard duty on imports of flat steel products for 200 days to ward off dumping from countries like China. Ferrous stocks rally anywhere between 2 to 7%. Other metal shares like Hindustan Zinc, Midhani also shine the sentiment rub-off.
Blue Star and PG Electroplast tell CNBC-TV18 that the availability of compressors could become an issue if AC demand grows more than 30% this summer due to the non-tariff barriers on component imports. The companies also await a government incentive scheme that can boost the adoption of more energy-efficient 5-star rated ACs.
Asian markets see cautious trade as Bank of Japan leaves interest rates unchanged in the face of tariff uncertainties. All eyes on US Fed as it is set to announce its rate decision tonight. No change in rates expected, but the commentary on potential weakening of US growth and rising inflation expectations are keenly awaited.
And after a 9-month mission, NASA astronauts Sunita Williams and Butch Wilmore safely returned to Earth. The SpaceX Crew capsule made a successful splashdown early this morning, bringing a 9-month ordeal to an end.
$22,900 is here, and for the Midcap Index, 50,500 is here. I'm Mangalam Malu. With me, Hormaz Fatakia. We were just speaking about his name in the break before the show. You're watching us here live from the CNBC-TV18 Motilal Oswal studio. Hormaz, what an up move that we've seen. The Midcap Index, 2,200 stocks in the green. What a great comeback, so to say.
Oh, comeback, and how? And that's been the story of the last 3 trading sessions, right, for the markets. And that's been the case for the broader markets, more in particular the Nifty, after a very, very good day yesterday, is building onto those gains, 70 points higher, nearing the highs of the day, holding on to levels of 22,900. So nothing to complain about. If you are a bull, you're up almost 1,000 points in just 10 trading sessions from the lows that you had made on the 4th of March. There are plenty of movers, of course, in the broader markets itself, and you should pull up some of these defense names that have seen a very, very sharp surge over the last few minutes. Garden Reed Shipbuilders is one of them, 17% higher now on the stock. Masgao Dock is up 8%. Shipping Corporation is up 7.5%. Bharat Dynamics is up 7.5%. Cochin Shipyard is up 7%. Something brewing in the defense space, and as a result of which all of these stocks are seeing a very, very sharp up move in today's trading sessions. We'll keep an eye out on more developments if and when they emerge. But for now, the broader markets doing very well for themselves. But the story of the morning has been the fact that the government has recommended a 12% safeguard duty on certain steel products for 200 days to protect the domestic industry from imports. Now, Nigel is bringing in all the details on how these implications stand post such a move. Nigel.
DGTR has recommended that close to around 12% safeguard duty on all imports that are coming in on HRC. This is important, but keep in mind this needs to be notified by the Finance Ministry as well, which most sell-side analysts don't believe it's going to be a bit of a challenge on that front. So for the time being, it's the DGTR that's proposed it. And in fact, we'll be waiting for the Finance Ministry to go ahead and approve it. Few points to note out here. One is the industry, they were rallying for around 20 to around 25% safeguard duty. But the realistic assumption was that you'll get closer around 10 to around 15%. In anticipation of this news, we've seen that steel prices have moved up by around 2,500 rupees per ton, or around 5% in the last 1 month or so. Now, with this 12% safeguard duty, they have some headroom to go ahead and increase prices further. Keep in mind that domestic flat steel prices are already at a premium in comparison to imported steel, though there could be some headroom out there. What's positive, though, is that this price hike that they've taken, that sticks, and that directly flows down to the EBITDA per ton. As it is, we know that coking coal costs have come down, so it'll be a dual benefit for them. Q3 FY25, in all likelihood, the EBITDA per ton for all these steel majors, they are bottomed out, and things will look up from here on, which is positive. Philip Capital, they have come out with a note, and they say in terms of pecking order, SAIL is the one that they believe is the most benefited, followed by JSW Steel and Tata Steel. There'll be a rub-off effect, though, on the entire value chain. So good news coming in for the steel companies, but keep in mind, they've been outperforming and anticipating this piece of news to come in there.
All right, Nigel, thanks a lot for that. In fact, to understand the impact of this, earlier today we spoke with Parthiv Jhonsa, who's the lead analyst metals and mining at Anand Rathi Institutional Equities, as well as Harish Krishnan of Aditya Birla Sun Life. Let's listen into the excerpts of that conversation. Parthiv in particular made valid points.
There has been reduction in the coal cost. There has been your iron ore is holding steady, and with this increase in realization, say by next maybe 1 or 2 quarters, you can straight away expect a good 10 odd % or maybe better than that kind of a EBITDA improvement across the ferrous sector.
We had three dark horse sectors. One of them was private banks, second was metals, and third was cement. Of course, these are 3-year views. It's not necessarily validated or invalidated by what we think has happened in the last 2 months or so. But from a metals perspective, the reason why we have been positive is if we plot the profit pool share, which is the profit of the metal sector divided by the top 1,000 companies' total profit. You will see that it's a very cyclical sector. A weaker rupee, to a certain extent, also benefits, the metal complex. So we've been positive on metals as a contra trade. Of course, the move has been very sharp, but we think, over a 2-3 year period, there still is a reasonable amount of, greater alpha creation, we think, from this metal complex.
Moving towards a near 1,000-point rally for the Midcap index right now. It's the headline of this afternoon. The Midcap index up 2%, 50,500 on that one. 967 points. We'll be doing a countdown to the 1,000-point mark on the Midcap index itself. And that's really the story of the day. But in that, a stock that has been doing well is Muthoot Finance. If you notice, the stock started out absolutely flat. And thereafter, in the second half of trade, immediately after the management joined us here on CNBC-TV18, we saw a pickup on that counter. And the biggest reason for that is the insight that the management gave to us in that interview. And that brings us to this Insight Edge segment that we're talking about right now. A couple of things that really stood out from what the management said to us. One, their gold AUM has crossed 1 trillion rupees mark, which implies a growth of 38%, which is much higher than the 25 to 30% that they had guided for. And this year, they believe that they will end at 40% growth, which again is higher than the guided band. FY26, they expect more than 15% growth to come by and 10 to 12% sort of net interest margins. And more importantly, apart from gold, which is doing well for them, they expect that, the MFI business or the microfinance business, which had been struggling, the worst of Belstar is behind them. They're moderating growth in that portfolio. Perhaps 2 more quarters of pressure out there, but the worst is behind. All these factors doing well for Muthoot Finance, that stock higher. So let's hear out what the company's MD, George Alexander Muthoot, had to speak about the growth guidance and the insight that he gave us on CNBC TV18 this morning.
We always keep a rate of our net interest margin, maybe 10% or so. Yearly, 10 plus or minus, plus or no, 10 to 11 is what we usually keep. Our microfinance had a portfolio of about 10,000 plus crores maybe 6 months back. Now they are moderating it. It is about 8,000 to 9,000. It has come down. So rather, they are moderating the growth. So if we see another 2 quarters of the issue, that pressure in the microfinance, but I think after 2 quarters, it will stabilize. We are almost touching 40% this year. So probably. So as of today, when we reach that 1 lakh crore, we have already reached 38%. So I think we should do better. As usual, next year also we will be giving a guidance of 15% only, sir. So we will do better, but our guidance will always be that, and we plan to do definitely better. We hope to do better. Of course, the base has gone up from earlier 72,000 crores to 1 lakh crore. So any percentage is big number today.
Time to take a short break here on Halftime Report, but just before we do that, here's some good news for our viewers. India's business news leader is now just a click away, and that is the all-new app of CNBC TV18, where you can get all breaking news, in-depth articles and financial research on the click of a button. You can download the app from the Play Store or the App Store, and of course, scan the QR code on your screen to download the app as well. We take a short break. More on the markets on the other side. Stay tuned. Welcome back. And a sector that has been in focus ever since the onset of the summer season has been AC names. All of these names, be it Blue Star, Voltas, and they continue to do well in today's session as well after the government has exempted a critical AC and refrigerator components from BIS certification. Upasana is joining in with more on this and the implications of this move as well. Upasana, good afternoon. Tell us more on this.
Good afternoon, Hormaz. As rightly pointed out by you, that government has exempted certain critical AC and refrigerator components from mandatory BIS certification. Now, this is to prevent a potential shortage during summer season. Now, Elara Capital on the back of this says that the government's move will have a positive impact as companies were facing issues in sourcing. It expects positive impact on companies like Voltas, Blue Star, Lloyd, Amber Enterprises and EPAC Durables, and we can see the stocks surging higher in trade today as well. Now, DPIIT has lifted BIS certification for grooved copper tubes and AC compressors of 2-ton and above capacity, and mind you, this represents a low single-digit share as compared to the overall RAC segment share. Now, Elara Capital is of the view that 55 to 60% of room AC compressors are imported, as local manufacturing is limited with Chinese, Japanese and Korean companies. It believes it is certainly a positive step, but not for large size of RAC market. Now, earlier this morning, management of Blue Star and PG Electroplast joined us to discuss about the summer demand, compressor shortage issue and also about this recent government notification. Now, Blue Star says that India is not fully self-reliant on AC compressors. It is importing substantial amount from China, and current supply chain can handle only up to 25 to 30% of growth in AC demand this season. The situation is in a touch and go situation at this point. Now, PG Electroplast also said that some of the players may face supply chain challenges if industry outgrows beyond 25%. And lastly, it has also highlighted that the cost is the major hurdle in boosting penetration of energy efficient 5-star ACs, is what the company has indicated. So all these stocks remain in focus today and we can see them surging in trade.
All right. Upasana, thanks a lot for that. So those are a bunch of stocks which are doing well. 25 to 30% demand up until that time, no problems when it comes to critical components itself. But while we're talking about a lot on the market which is doing extremely well, there is a lot which is not doing well as well. And that's perhaps the sector which is putting the lid on the gains that we're seeing on the Nifty itself. And it's the IT pack that we're talking about. It's been underperforming and, it continues to look expensive as per brokerages. Hormaz, IT has been underperforming and the fear is that it may sell off even more.
And the sentiment is not improving anytime soon because of the fact that the uncertainties in the US markets as well. The sell-off on the Nasdaq last night rubbing off in today's session as well. From the peak that it had made in December, the Nifty IT index is in bear market, which means that it has corrected more than 20% from the top. And despite this, Citi has come out with a note saying that the valuations of the Nifty IT are still expensive. And in this 21% correction that the index has had from the top, which includes a 16% correction this year itself, the valuation premium that the Indian IT sector has in comparison to the Nifty is at 30%. The 10-year average is only 12%. It still says that it's on the higher side, especially considering that India's growth prospects are likely to improve going forward. Now, Citi has highlighted a multitude of headwinds that the IT sector is likely to face going forward, predominantly the global macro uncertainty, specifically down to the recent macro data that came out from the US, which is indicating that the near-term outlook remains tough. Sentiments are not improving anytime soon, and the fact that there is disruption in the AI market, the competition from GCC, all of that is adding to the troubles for the IT sector. Now, what they also say is that they are expecting their coverage universe to report a revenue growth of 4% in FY26, which is the same that they are penciling in for the current financial year as well. So they are not expecting any higher growth as well on a year-on-year basis. And they also say that despite the rupee weakening against the dollar, which is generally positive for the IT companies, improving margins here will not be easy, especially because of the rise in competition. So the view here remains cautious, as a result of which they have a neutral rating on Infosys and HCL Tech. They have upgraded emphasis to a neutral from their earlier rating of sell, but they have a sell recommendation of most of these mid-cap IT names, be it Tata Tech, Coforge, Persistent Systems, LTTS, And these large cap names as well, say the likes of Wipro, Tech Mahindra, TCS, LTI, Mindtree. So all in all, a very cautious note coming in from Citi. And despite this fall that they've had on the IT index, it's not getting any better.
It's not getting any better. And but what's getting better is the order book of a lot of companies, Hormaz. You know, the IT index at the low point of trade. But as we spoke, as you were talking about that, we got a couple of orders coming in for Transrail Lighting. It's up around 1,650 crores. We made the point, right, that as we move towards the end of financial year closure, there'll be a lot of companies which would be looking to prop their order books up and, you know, finish some of the formalities of order wins this year itself. So, you know, these companies you'll hear a lot more about order wins that will come by as well. We spoke about Transrail Lighting. Look at, you know, that stock up 4% right now. GR Infra is the other one, which is up around 10%, 4,000 crore worth orders. They informed the exchanges late last evening. And perhaps that could be the case for a lot of these other shipbuilding companies as well. Maybe some order wins in the offing for these guys. So Garden Reach Shipbuilders, you pointed this out earlier, Mazagon Dock as well, both of them up around 7 to 17%. So we'll keep an eye out on all of this. And while we speak about that, Marksons Pharma is the other one, which has gotten a marketing authorization for a drug from the UK MHRA. Take a short break, come back. On the other side, we focus back again on the markets. Pritesh Mehta of Yes Securities joins in with some trading strategies.
I thought, you know, I should leave. I should go back to India. We will figure out what is it that we will do. There was no idea for free will. So I came. Rahul also left at the same time. Then we spent almost a month or two to figure out, okay, now what next? So it always started from the family, then solving some, you know,
the
consumer
business
problems.
Plan, the business plan came later. First,
Always.
But how do we ensure that we're in the
That
same?
has always been the priority. What you see in front of the label is very different than what is on the back of the label.
And then very different from what's actually inside the bottle.
Exactly. I guess so far we are in some 2,000 stores. In next 2 years, we can easily target anywhere between 15 to 20,000, right? When you go deeper into any category, you also understand the good, bad, ugly side of it. It's a misconception, to be honest. I think the percentage of spend required for R&D eventually is much lesser that you need for your marketing. Investing in R&D is much better ROI than always doing it in marketing.
Welcome back. Still about 22,900 is the index, but the defense stocks are the ones that have been the highlight, right? 18% higher now for Garden Reach. And GR Infra, after the LOA that it received, also is holding on to gains of 10% that it had since the morning session. But the other stock that has made some moves over the last few minutes is Tanla Platforms. That's up 15.5% in today's trading session and on very strong volumes as well. The other one is HBL Engineering. That stock has seen a surge of around 13% in today's trading session. But it's a good time to get you the F&O setup at midday. And Mangalam has hopped over to the wall, not to my left, but to my right. Mangalam, if the things are looking right, what's the F&O data indicating?
Things are looking right. I'll tell you what the F&O data is indicating, that maybe we consolidate for the frontline index right here. And the reason for that is this tug of war which is taking place between the Nifty Bank and the Nifty IT itself. So the IT index is the big drag, and that's kept the Nifty's gains in check to around 22,900 itself. But because of the up move that we've seen and the support that has moved higher, it's important to note that the mid-cap and the broader markets are doing a lot better. Small cap index up around 2% as well. And if you look at the market breadth as well, 2,100 stocks which are in the green for just about 300, 400 stocks which are in the red itself. So again, a parallel train track which is running for the frontline indices. What's interesting is that with today's up move and the outperformance, the Nifty Bank has crossed the 20-day moving average yesterday, 50-day moving average today, and now it's making a dash towards the 100-day moving average, which is about 400-500 points from here on itself. Were this to happen to the Nifty itself, we could go all the way up to 23,000, because the Nifty, which has crossed the 20-day moving average, is struggling to cross the 50-day moving average because of the underperformance of the IT index that we had spoken about. If you look at a lot of the option writing that has taken place, and tomorrow is the weekly options expiry, 22,900 put writers, fairly active, 1 crore shares in open interest, premium 80 rupees, telling you 22,820 is an important support. But at the same time, 22,900 call writers are active for the same amount of premium and same open interest as well, for a premium of 82 rupees, telling you levels closer to 23,000 could see some bit of resistance. We've also seen some writing at the 23,000 call itself. For just tomorrow's expiry, maybe 23,000 could be a bit of resistance. Those who are writing the 22,900 call and put, you would expect them to see some support at around that 22,750 mark for the frontline index itself. A lot of individual stocks which are on our radar. Escorts Kubota is the one that really stands out in terms of fresh long build-up. We have Phoenix Mills, which stands out in terms of fresh short build-up. And with the broader markets, which are doing a lot better, I expect Manappuram Finance and Bombay Stock Exchange to actually come out of F&O ban. These stocks have been in F&O ban practically all through the series so far.
The tractor is powering along very well for itself. Mangalam, thank you for that F&O update. Escorts Kubota 5.5% higher at the highest point of the day. Still significantly away from its 52-week high, but having a good day today. But Pritesh Mehta of Yes Securities is joining in now for a quick chart check. Pritesh, good afternoon. Thank you for joining in. How big is that resistance at 23,000? We have conquered some important levels coming into this 1,000-point rally. What are the charts suggesting now, and your specific stock recommendations as well this afternoon?
Good afternoon, guys. See, last time we appeared on this show, we discussed how seasonal study tells us that month of March tends to be an opportune time to buy into equities. And so far, we have done well. Nifty is up by 3% in this month. Even broader markets have participated. So I think that, in short term, we could see a bit of consolidation, but eventually the market is going to trend higher. See, we have reached a phase where, US markets is likely to underperform. And there could be outperformance from the rest of the developed markets. Also, the rest of the emerging markets do well. We already seen Hang Seng and China on the path of recovery. India, after a bit of sell-off last 4 months, has stabilized. And so I think, funds would look for better opportunity with also DXY dollar index correcting. There would be better opportunity available outside of US. So I think we are in a sweet spot right now.
What about specific stocks, Pritesh?
So, first stock that I would like to recommend is SAIL. Now, see, metals are going to be hotspot for 2025. We're expecting big moves from this space. It is metals are already showing relative strength against the Nifty index, with the first sector to bottom out back in the month of Jan, and we are witnessing follow-through move on the upside. For SAIL, it has given a bullish total breakout. I'm expecting a move towards 133, and stop loss would be around 107. And the second recommendation, buy on Indigo. Now, see, we have seen series of double top buys, bullish total breakout, also ABC breakout. Tells me that this stock is ticking all boxes when it comes to charting its course on the upside. So I believe that there is more to come. Buy for the target of 5,500, and the stop loss would be around 4,800.
All right. Thank you so much, Pritesh, for joining in and give us your views on the market and individual stocks. Interglobe Aviation has been on the fly for a lot of chart experts this morning, and also fundamentally too. They released a PowerPoint presentation to the analysts saying speaking about the prospects of the aviation industry in the country, along with their own growth path out there too. With that, we'll step into a short break, get you more on the markets and a lot of stock specific action right on the other side of this short break.
Welcome back. Now, Indices International Holdings has completed the acquisition of debt-ridden Reliance Capital by transferring the entire bid amount to the lenders. Now, chairman of the group, Ashok Hinduja, said that they will only keep the key entities of Reliance Capital to avoid any litigations post the acquisition. Listen to what he had to say.
On Reliance Capital, there are about 3940 subsidiaries. So we have also reviewed that out of these 3940 subsidiaries, how many of them should be kept and how many of them we should exit, because most of them are shell companies and lot of transactions have happened. So we said rather than post acquisition there may be a lot of litigations, we don't like to do that. We are in the business of two major insurance companies, RCAP as a holding structure, all other companies. I think post-acquisition in 2, 3, 4 weeks, the board will meet, board will take a call, and hopefully they will decide whether we keep or we exit from all those companies.
Right. In fact, our colleague Shilpa also spoke with the management of Reliance General Insurance and Reliance Nippon Life Insurance on their Reliance Capital acquisition. More importantly, the expectations of the business going ahead as well. So let's hear this conversation out.
I think overall business has done well in spite of all the headwinds and all the media news that used to come, and there were days when we used to discover from the press on what is happening and what is not happening, but overall business has continued to do well thanks to efforts of the management and team, etc. The acquisition now gives us opportunity to move into bancassurance. We spoke about the bancassurance opportunity, and like we know there is an opportunity in building the bancassurance business, and that's a clear short-term step to be able to do.
Correct.
Other than that, there are a fair amount of businesses around the Hinduja group and around IIHL, other entities, which we can now have access to.
Right.
Besides that, I think the big one now is that now everything around the branding is settled and hopefully there's a new brand. We use that to drive energy and we use that to dispel any misgivings in the market to be able to grow the franchise further.
I think insurance is a long-term story. We should not really see the growth in a context. Coming to Reliance General Insurance, I would say that we are still growing faster than the industry growth rate, even in the transition period. And that really gives us the confidence that with this transition and with the very strong brand name of Hinduja's and in the Indices, we should be able to even accelerate better.
Correct.
So our objective is to really take the opportunity in insurance with this brand transition and make a lot of value, for different stakeholders. We are already growing double digit. The growth for us, industry growth is about 6.5%, 7%. If you really see till now, and we are growing about 10 to 11%.
Right.
So, structurally we are growing 1.5 times the industry growth rate. But I would say that the growth of 10, 11% can still be exceeded the way we really tap the insurance requirement, and the industry growth obviously will bounce back, with the economy picking up in the next few months.
Some important comments coming in there. We take a short break. On the other side, we get you some more buzzing stocks from the broader markets. They include the likes of Lemon Tree Hotels and Tata Communications. Stay tuned.
Welcome back. We're talking about defense. Just look at some of these rail names as well. All of last year, these stocks had done well before they fell off the cliff. And maybe a part of, NAV propping is taking place out here as well. So the ones which did well in the first half of FY26 are now, seeing some bit of pickup once again. So RailTel's moved higher. We have Titagarh, which has done well. And we have, other rail-related names as well. Ircon should come up for you. All of them buzzing around in today's trading session. But let's look at Tata Communications, a bullish note that has come in from JM Financial. Hormaz?
Yes, indeed. They have initiated coverage on Tata Communications with a buy recommendation. It's a 2,030 rupee price target. You compare that to yesterday's close, it's a 35% upside potential that JM Financial is talking about. And what they say is that they are valuing the data segment, which is their core business, at around 11 times FY27 EV to EBITDA, which is at a slight premium compared to their historical average of around 10.2 times. Now, why they are giving it that premium? Because they are expecting this segment's EBITDA, the data segment EBITDA, to grow at a 21% CAGR over the next 4 years. That's between FY24 to FY28. And they also expect the company's digital portfolio to be a long-term growth driver as well going forward. Now, Tata Communications has laid out some targets for FY27 that they intend to achieve, but JM Financial is saying that because of these uncertainties that are arriving because of the global macros, that might not be possible, that might be delayed to FY28, or they might take the inorganic acquisition route to achieve those targets in FY27. And these weak macros, the delayed discretionary spending are some of the key risks, along with an unfavorable AGR ruling are some of the key risks that JM Financial has highlighted. But they remain bullish on the stock, initiating coverage, a 35% upside potential there, stock doing well for itself. But the other one that's doing well today is Lemon Tree Hotels. What's happening here?
Well, the entire hospitality sector is abuzz. You know, Lemon Tree Hotels has moved to the high point of trade. But if you look at the others as well, you have Indian Hotels, which has moved well. Indian Hotels, actually, the intraday comes up for you. That's at the high point of trade. Alongside that, ITC Hotels, after a very long time, came up on our radar as well, up around 4.5%. We're seeing a decent traction on even Park Hotels. We remember speaking to the management here on Halftime Report with the management of APJ Park Hotels. So Park Hotels is the other one, which is up around 6%. In light of that, Lemon Tree is gaining 2%, but not as much as the others. But you know, what's driving the stock and the industry so far is the brokerage bullish note coming in. Macquarie has an outperform rating, a target price of 210 on Lemon Tree Hotels, because they believe that the company has many levers of growth. Post-renovation performance improvement. Remember, a large part of their pipeline is undergoing renovation. Typically, their assets, you know, do a lot better when they're renewed, and the new assets they stabilize along with higher management fees would do well. The newest asset that is stabilizing, they're talking about Aurika Mumbai, which is a premium asset, but now is gradually seeing an increase in occupancy as well. Currently, in terms of valuation, this is trading at a discount to peers, and the stock has the potential to double at 1 times price to earnings growth, the PEG ratio that we speak about. Add to that, if they do go ahead and make another, you know, acquisition like they did, with Fleur and all the others earlier, and a Fleur IPO could give another optionality of an upside. So as a result of which, they see a big up move, almost 90 rupees from current levels, which is 70-80% from current levels itself. So we'll keep an eye out on that. But there's news on Tata Motors, where the board has approved fundraise of up to 2,000 crores via NCDs on a private placement basis. Remember, Tata Motors has been buzzing around from lows ever since the management maintained their guidance on JLR margins. With that, slip into a short break, come back. That's enough coverage about the equity markets. And we were speaking about 1,000 points in the Midcap index, right? A good time to wrap up on the equity coverage on this show, with the Midcap index at 1111 in terms of gains is 1,111 points on the Midcap index. Wonderful. Take a short break, come back, all things commodities with Manisha Gupta and Claudio Kovrig of Kovrig Analysis.
Welcome back, and joining us now on the show is Claudio Kovrig of Kovrig Analytics. Claudio, hi, thank you for joining in. And sugar really seems to be making headlines, for sure in India, but outside India as well. I want to first of all talk about on what really bothers India at this point in time. It is also about the crop, it's about the closing versus the opening stock. How are you looking at all of these numbers?
Yes, I think the market reacted to the recent cuts in Indian production. I mean, India revised production downwards almost on a weekly basis. And then the global markets started to fear and panic that, I mean, because there were some rumors that the Indian government might stop the exports. So that was the problem, the impact on the international market. But the problem is that, okay, the Indian government cannot stop these exports that were given back in January, about 1 million tons of white sugar, just because about 500,000 tons are already sold, and then it will disturb all the market players there. I mean, 100,000 tons is in the hands of traders. 200,000 tons were already sold from India. About 200,000 tons are to sell in March and in April. So then it's not easy, but market is panicking. Then, of course, was not only India, was also Brazil, where there is dry weather in March. The Brazilian real also strengthened a bit in the last 2-3 weeks. I mean, it was about 6 per dollar. Now it's about 5.6. You see, so there is kind of a bullish momentum in the sugar market, but the fact that ignited these weekly prices, I mean, the spark in prices was definitely India. And it was this national association that published over the weekend these numbers, or bullish numbers regarding the Indian crop, showing that the crop is much down on the year. Even though Maharashtra started to crush later this year, we are much behind last year's numbers. It is a bad crop in India. It is a bad sugar crop. And then now, if this year we have a bad sugar crop, there is question mark about the next season, right? I mean, we say, okay, we have seen like a 6 million tons or maybe 6.5 million tons increase in sugar production for the next season. But will it be so? If we revise down this year, shall we revise down the next year? And then the problem with the next year is the how much we consider that India might export next year, right? Because if production is supposed to spark next year, then we would have also bigger exports, which might not be the case. Because if this year India finishes with whatever we calculated here, stocks at about, let's say 4.4 million tons, then you cannot export next year, I don't know, 4 million tons of whites, right? So for sure, next year, probably exports will not be more than this year. Maybe, let's say, government could give 1.5 million tons of whites, but not more than that.
Also, how are you looking at the global markets then, Claudio? Because while, of course, India, as you said, every fortnight has been looking at revising lower and lower. And I'm assuming we'll get the final numbers only by the first week of April, and whether or not there's further revision onto this one. But how are you looking at the global numbers now? And is there a concern about global deficit?
Yes. Due to the revision that we did for India, now the global picture is that we go into a deficit this year. We were kind of imbalanced, like, or a surplus of about 80,000 tons, nothing. But then because we revised the Indian numbers this week, we are going in a deficit of about 2 million tons now for this year. Now, of course, people will say, it's not a direct impact on the trade flows, because anyhow, the sugar in India remained locked in, except this 1 million metric tons given for exports. But yes, but it doesn't sound well for the funds also, because funds now are short and then are looking to a big surplus in the next season, about 4 million tons of surplus. The problem is that the surplus next season is kind of virtual, right? Because we are only talking about estimates. And then we've seen that in practice this year, it didn't go according to the estimates. So then depends on the weather. So that's it. This big surplus next season might be at risk, right? So that's how the market looks like. And then I don't know for how long these funds will remain short, because now if the Brazilian crop doesn't confirm, and Brazil is a very big raw sugar exporter, then we have more upside momentum. But now people will switch their interest from India, which makes some kind of bullish news this week, to Brazil. And everything that will happen in Brazil will matter for the next 4, 5, 6 months.
Claudio, you talked about on how there are concerns, and India's sugar output does seem much lower than the actual is much lower than the estimates, clearly, and that clearly seems to be supporting a lot of sugar company stocks right now. But as you spoke, there is this whole new buzz about on whether or not the government would ban these exports, stop them midway, perhaps come out with a clause, or etc. You do not see that happening. I mean, as you said, with the calculation that we are looking at, it perhaps would be a difficult thing to do, or maybe the government will not look at it at all.
I think the government can analyze the possibility, but this possibility shall come mainly in April or in May. It is very hard to stop the logistics of these exports because now all the exporters are freaking out and they will say, hey, I have to export as much as possible now because I don't know what the government will do. That's one thing. Another thing is I don't think the government will stop anything because anyhow, 500,000 tons you cannot touch anymore. The other 500,000 tons is very hard to touch because in the meantime, people will contract more. Now, the thing is, probably not, will not interfere in that. But the situation then remains tight in India because, you know, ISMA also slashed consumption. We were working with consumption of about 28.2 million tons in India. All the remainder was either the leakage to other countries or official exports or whatever. And now we see the impact in that. And then ISMA, for example, slashed consumption to 28 million tons, okay?
Right.
But the problem is that...
So it does, Claudio, would you say it looks like an adjustment of sorts to fit in numbers?
I don't know. We were working with 28.2 because we consider that the pipeline was very big in India. It was about 2 million tons. So then, firstly, India consumed from the pipeline. And that's why we didn't see in the sales of the mills this kind of impact.
That is a number to watch. That is a number to watch.
Yes.
Oh, absolutely. So you know, when you look at it, Mangalam, last year we consumed 29 million tons. Just before, because the sugar is less this year, you cut the consumption to 28 million tons as well. So that is something that really seems to be bothering a lot of people.
Most definitely keep an eye out on that. In fact, when you were having that conversation, Balrampur Chini actually moved to the high point of trade up around 10% right now. We started this segment with the Midcap index being up around 1,100 points. Now it's up 1,200 points. So the market continues to do well. Your portfolio seeming a lot better as well. Take a short break, come back. On the other side, you have business lunch. Hopefully less sugar in that lunch as well. But we'll take all the market updates on business lunch.